I thought the stock market was just a bunch of numbers flashing green and red, and my goal was to guess which flashing light would go up next. But that is a complete lie. If you want to understand stocks, forget the flashing charts and corporate skyscrapers. Instead, let's start with level 1, what a stock actually is. Imagine I want to open a small pizza stand in my neighborhood. I have the perfect pizza recipe, but I only have cash for the oven. I need $1,000 to buy the dough mixer and the counter. So I go to my neighbor, and I offer him a deal. If he gives me $100 today, I will give him a piece of paper representing 10% of my business. That piece of paper is a share of stock. If my pizza stand becomes popular and sells thousands of pizzas, the value of the whole stand rises to $10,000. Now, my neighbor's 10% share is worth $1,000. He can sell that piece of paper to someone else for a profit, but if I burn the pizzas and go bankrupt, that piece of paper is completely worthless. That is the simple truth of the stock market. You aren't buying digital digits on a phone screen. You are buying a tiny slice of a real business with physical walls, actual employees, and real products that people buy every day. When Apple sells an iPhone, or Nike sells a sneaker, a tiny fraction of that profit belongs to whoever owns their paper. And if you own their paper, you own their success. This brings us to level 2, why you are forced to play this game. Now, cash is absolutely necessary for emergencies and short-term stability, but keeping all your long-term savings in cash is a silent trap. You check your banking app, see a stable balance, and feel secure. But that stability is completely artificial. Imagine I stuffed $10,000 in cash under my mattress in 1990. It was safe from the stock market, safe from banks, and safe from crashes. But when I pull that cash out today, it buys less than half of what it did 30 years ago. The cash didn't physically escape, its buying power was quietly stolen. We call this inflation, but it's really just a silent tax on patience. Inflation isn't just money printing. Supply chain shocks and energy prices play massive roles. But when trillions of new dollars flood the market, currency dilutes. Each individual dollar in your pocket loses a tiny bit of its weight. It is like trying to hold water in a leaky bucket. If you do nothing, your savings are guaranteed to slowly melt away. This is why the wealthy do not hold massive amounts of cash. They hold assets, things that grow in value, like businesses and real estate, because when prices rise, the value of those assets rises with them. You don't invest to get rich quick by Tuesday. You invest because holding cash is a guaranteed slow-motion robbery. If you leave your long-term wealth sitting idle, you are choosing to lose. The system is designed to reward owners and punish savers. And to survive, you must transition from a consumer to an owner. Which leads us to level 3, learning how to actually think about value. I'm Chip, and before we talk about buying pieces of businesses, I need to make something absolutely clear. I am not here to tell you which specific stock to buy today or sell tomorrow. Wall Street is full of hype men trying to sell you their strategy. I want to show you the rules of the game so you can make your own decisions. The most important skill in this game is learning to study the business model. You need to look past the stock chart and understand how the company makes money. And when the stock price drops, you shouldn't automatically panic. If the company's business model is strong and their revenue remains solid, a drop in the stock price is just a discount. It is like walking into a store and finding your favorite shoes on sale. You don't run out of the store screaming because the price went down. You buy more because it is cheaper. Yet, when stocks drop, average investors panic sell their shares in terror. They let their emotions dictate their financial future. We cannot predict the short-term future of the market, but we know it does rhyme with history. Over time, panic fades, and strong businesses eventually rise back to their true value. History shows us that market panics are regular, seasonal sales. If you understand the business model, you can ignore the noise. You buy when the business is sound and the price is right, and you sell only when the business model is fundamentally broken, not because some chart turned red. Now, studying a business is powerful, but it takes massive effort and time. Which brings us to level 4, the dangerous trap of picking individual stocks. When I first entered the market, I thought I could pick the winners. I spent weeks researching a hyped tech stock, bought it, and watched it drop. I panicked, sold it at a loss, only to watch it double months later. I let my emotions run my bank account, and it was a costly lesson. Trying to pick individual stocks is a statistical trap. Professional money managers on Wall Street have teams of analysts, supercomputers, and direct access to company executives. Yet, data shows that 90% of these professional fund managers fail to beat a simple index fund over a 15-year period. If the guys in $5,000 suits can't beat the average, why do you think you can do it on your phone during lunch? When you buy a single stock, you are exposed to company-specific risk. If the CEO tweets something crazy, the factory catches fire, or a competitor releases a better product, your investment craters. Sweating over spreadsheets and quarterly earnings is exhausting and unprofitable. For every Apple that succeeds, 100 other companies go bankrupt. As a beginner, you don't want to play a game where the odds are rigged against you. You don't need to guess which seed will grow into the tallest tree. You just need to own the entire forest. This brings us to level 5, the lazy genius strategy. Instead of trying to find the one perfect stock, you buy a basket that contains hundreds of the biggest companies at once. We call this an index fund. But let's break down what that means. An index is just a shopping list of the top companies in the market. And an index fund is a single product that buys everything on that list for you. It is like buying a pre-packaged box of chocolates instead of choosing individual pieces. The S&P 500 is the ultimate cheat code for beginners. When you buy one share of an S&P 500 index fund, you are instantly buying a tiny piece of the 500 largest companies in America. You own Apple, Microsoft, Amazon, and Tesla all at the same time. If one company performs poorly, the other 499 carry the load. It is the ultimate form of diversification. And the best part? It requires zero effort. You don't have to watch the news or analyze spreadsheets. You just set up an automatic monthly transfer, buy the index, and let compound interest do the work for 30 years. But let's look at how interest actually grows your wealth. With simple interest, you earn a profit, but you take it out and spend it immediately. Your base money stays the same size, so your growth is just a straight line. With compound interest, you leave your profits in, so you make profit on top of profit. It starts out slow, but eventually it snowballs into massive exponential growth. Over the last century, the S&P 500 has returned an average of 10% per year. It doesn't sound exciting, and it won't make you rich by next week. But if you invest just $300 a month, in 30 years, you'll be sitting on nearly $700,000. Most actual millionaires are just tired dads buying light bulbs at the hardware store, who let their index funds quietly grow in the background. But here is the most common mistake beginners make. They set up their automatic transfer to their stock brokerage account and think they're done. But that cash is just sitting there in another bank account. You haven't bought anything yet. You must set the system to actually buy the index fund, or your money does not grow. If you skip this step, your cash will just sit there, still leaking value to inflation. They didn't win the lottery or time the market perfectly. They just realized that patience is the ultimate leverage. By buying the whole market, you win when the global economy wins. Stop gambling on individual tickers. Buy the basket, automate your savings, and go live your life. That is how I explain money. Start growing your forest today, and let time do the rest.